If you are receiving Social Security, SSI, SSDI, or any retirement benefit in the United States, this is a moment where paying attention truly matters. Across the country, seniors are opening their mailboxes and seeing official notices from the Social Security Administration. At the same time, many banks are quietly changing account rules, fee structures, and minimum balance requirements. These two things happening together are not a coincidence, and understanding what is changing can help protect your monthly income, your savings, and your peace of mind. Many seniors feel uneasy when they hear about SSA notices and bank changes in the same sentence. That feeling is completely understandable. For millions of older Americans, Social Security is not extra money. It is the foundation that pays for rent, groceries, utilities, medications, and daily living expenses. Even small changes like a new fee or a missed notice can have real consequences. That is why today's discussion is focused on clarity, calm explanation, and practical understanding so you can stay informed and prepared rather than worried. The Social Security Administration sends notices for many reasons. Some notices are routine and expected, while others signal changes that require attention. In recent months, more notices are being sent because of system updates, verification reviews, benefit recalculations, and coordination with financial institutions. These letters are not meant to scare anyone, but they are meant to inform beneficiaries about updates that may affect how payments are delivered, confirmed, or adjusted. One of the most important things to understand is that SSA notices do not always mean something is wrong. In many cases, they are informational. Some notices explain benefit amounts for the year, confirm payment schedules, or remind recipients about reporting responsibilities. Others may relate to cost of living adjustments, income verification, or banking information on file. The key is not to ignore these letters. Even if the message seems routine, reading it carefully ensures you do not miss something that could affect future payments. At the same time these notices are going out, banks across the country are changing policies. Some banks are adjusting overdraft rules, others are changing monthly maintenance fees, minimum balance requirements, or fee waivers for seniors and fixed income customers. These changes can affect how much of your Social Security payment you actually get to keep each month. A small fee may not sound serious, but when it happens every month, it adds up quickly. Many seniors rely on direct deposit for their Social Security payments. Direct deposit is generally safe and reliable, but it also means your benefit flows directly into a bank account that is subject to bank rules. If a bank increases a monthly fee or removes a fee waiver, that money can be taken automatically before you even notice. This is why understanding your bank's current policy is just as important as understanding your SSA notice. There has also been growing coordination between federal benefit systems and financial institutions. This coordination helps prevent fraud, speed up payments, and ensure accuracy. However, it also means that outdated information can cause delays or interruptions. If your address, banking details, or personal information does not match across systems, it can trigger verification notices or temporary payment holds. This is not a punishment, but it does require timely attention. Another reason notices are increasing is because more seniors are reaching review milestones. Periodic reviews are part of how Social Security ensures benefits are paid correctly. For retirement benefits, this may involve confirming income sources or work status if applicable. For disability-related benefits, it may involve medical or eligibility reviews. These processes can sound intimidating, but they are a standard part of the system and often resolve smoothly when handled promptly. Banks are also responding to broader economic pressures. Rising operating costs, regulatory changes, and shifts in consumer behavior are leading many banks to adjust how they structure accounts. Some banks are reducing free account options, while others are changing how overdrafts are handled. Seniors who have had the same account for many years may not realize that the terms have changed unless they read bank notices carefully. One concern that deserves attention is the timing of fees. Some banks now assess fees earlier in the month or immediately after deposits post. This can be problematic for Social Security recipients whose benefits arrive on a fixed schedule. If a fee is deducted as soon as the payment arrives, it reduces the amount available for essential expenses. This is why it is important to understand not only how much a fee is, but when it is applied. There is also confusion online about stimulus payments and bonus checks. Many seniors are seeing headlines that mix real updates with speculation. While there have been ongoing discussions about relief measures, credits, and targeted assistance, not every online claim is accurate. SSA notices are the most reliable source of information about your specific benefits. If a payment or change is real, it will be reflected in official communication or your benefit record. Some notices explain that payments will continue as usual, while others may clarify eligibility rules or reporting requirements. For example, changes in living arrangements, income, or marital status can affect certain benefits. Reporting these changes is not about losing benefits, but about ensuring accuracy and preventing future issues. When changes are reported on time, problems are far less likely to occur. Bank changes also create an opportunity to reassess whether your current account still meets your needs. Many seniors assume loyalty to a bank guarantees the best terms, but that is not always true. Account terms evolve, and what worked years ago may no longer be ideal today. Understanding your options gives you control rather than leaving decisions to automatic systems. Another important issue is protection from unauthorized withdrawals and errors. SSA payments are protected under federal law, but once deposited into a bank account, certain actions can still affect access. Fees, holds, or incorrect account settings can cause temporary problems. Reviewing your bank statements regularly helps catch issues early when they are easier to resolve. It is also worth noting that SSA notices often arrive during periods of system updates. Technology upgrades are necessary, but they sometimes require beneficiaries to confirm information. Responding promptly keeps your payments flowing smoothly. Ignoring a notice does not make it go away, and in some cases, it can create avoidable delays. For seniors who feel overwhelmed by paperwork, it helps to take things one step at a time. Open the notice, read it slowly, and focus on what action, if any, is required. Many notices are informational only. If action is needed, it is usually clearly stated. Taking a calm approach makes the process far less stressful. In this first part, the most important takeaway is awareness. SSA notices and bank fee changes are happening at the same time, and both can affect your monthly income. Staying informed puts you in a stronger position. In the next part, we will go deeper into what these changes mean for your payments, how to protect your benefits, and how to make sure your hard-earned Social Security income works for you, not against you. As we continue, it is important to focus on what these SSA notices and bank changes mean for you in real life. This is not about theory or technical language. This is about your monthly income, your ability to pay bills on time, and your sense of financial stability. When official systems change, seniors deserve clear explanations, not confusion or fear. One of the biggest concerns seniors have is whether these notices signal a reduction or loss of benefits. In most cases, they do not. Social Security benefits are earned, and the system is designed to continue paying them as long as eligibility remains. However, the system does require accurate information. Notices are often sent to confirm details, update records, or explain adjustments. When these steps are completed correctly, benefits usually continue without interruption. That said, small issues can become big problems if they are ignored. Something as simple as an outdated bank account number or a change in address can cause delays. If a payment is returned or flagged, it may take time to resolve. This is why reading and responding to SSA notices matters. They are a way to keep the system working smoothly on your behalf. Bank fee changes deserve just as much attention. Over time, many banks have slowly shifted costs onto customers. Fees that did not exist years ago may now apply. Seniors who rely on fixed incomes feel these changes more sharply because there is less room for error. A monthly fee may seem minor, but over a year it can take away money meant for food, prescriptions, or transportation. Another issue is overdraft policies. Some banks are changing how overdrafts are handled, including when fees are triggered and how much they cost. For Social Security recipients, timing matters. If bills are scheduled too close to deposit dates, even a short delay can trigger fees. Understanding how your bank processes deposits and withdrawals can help you avoid unnecessary charges. Many seniors assume Social Security payments are fully protected once deposited. While federal law does protect these funds from certain actions, bank fees are not always included in that protection. This means that even protected benefits can be reduced by account-related charges. That is why choosing the right account and understanding its terms is a form of self-protection. There is also increased monitoring to prevent fraud. This is generally a good thing, but it can sometimes result in temporary account restrictions if activity looks unusual. Large purchases, changes in spending patterns, or account access from new locations can trigger reviews. If this happens, it is important to act calmly and communicate clearly with your bank to resolve the issue. Another topic many seniors ask about is whether new stimulus payments or relief checks are connected to these notices. While there are ongoing discussions about economic support and targeted assistance, official payments are never hidden or secret. If new payments are approved, they are communicated clearly through official channels. Be cautious of claims that urge immediate action or promise guaranteed extra money without confirmation from official notices. It is also important to remember that Social Security reviews are not accusations, they are part of system maintenance. When information is requested, providing it helps ensure fairness and accuracy. Many seniors worry that responding could lead to benefit loss, but in reality, failing to respond is far more likely to cause problems. Financial stress can take a toll on emotional well-being. Seniors often carry the responsibility of managing limited resources while facing rising costs. That is why knowledge is empowering. Understanding what is happening allows you to make informed decisions instead of reacting out of fear. If you receive an SSA notice and do not understand it, take time to read it more than once. The language may seem formal, but the message usually comes down to a few key points. Focus on whether action is required and by when. Keeping copies of notices and notes about your responses can help if questions arise later. With banks, reviewing statements regularly helps catch changes early. Look for new fees, timing differences, or unfamiliar charges. Addressing issues quickly is easier than trying to fix them months later. Many banks offer senior-specific options, but they are not always automatic. Awareness is key. Another important consideration is budgeting around deposit schedules. Knowing exactly when your Social Security payment arrives allows you to plan expenses more effectively. Aligning bill payments with deposit dates can reduce stress and prevent fees. Even small adjustments can make a meaningful difference over time. Technology also plays a role. More notices are now issued digitally, and banks increasingly encourage online access. While this can be convenient, it is not required for everyone. Seniors should choose the method that feels most comfortable and secure. What matters is that information is received and understood, not how it is delivered. As systems evolve, seniors sometimes feel left behind. That feeling is valid, but it does not mean you lack control. Staying informed, asking questions, and taking deliberate steps help maintain independence. These systems exist to serve you, not the other way around. Looking ahead, changes will continue. Economic conditions, policy updates, and banking practices will evolve. What does not change is the importance of vigilance, reading notices, understanding bank terms, and staying engaged with your financial situation helps protect what you have earned over a lifetime of work. Before we close, remember this central message. SSA notices are not automatic bad news. Bank changes are not something you have to accept without understanding. Knowledge gives you options, attention gives you protection, and calm, informed action gives you confidence. By staying aware of official communications and how financial institutions operate, you put yourself in a stronger position, you reduce surprises, avoid unnecessary losses, and keep your Social Security income working for you as it should. This information matters because your financial security matters. Staying informed is not about worry, it is about empowerment. It is about making sure your benefits continue smoothly and your money lasts as long as you need it. Thank you for taking the time to stay informed, and remember that understanding these changes today helps protect your tomorrow.